Welcome back now. Thungela Resources profits slumped as coal prices fell to levels last seen during the COVID-19 pandemic. The thermal coal exporter says strong cash position and disciplined capital allocation have allowed it to declare an interim dividend. CEO July Ndlovu joins us now with greater insight on the first half that was. Thank you so much for your time, July. Let's actually start off there with the coal pricing cycle. How would you describe the movement of coal prices in this period?
Coal prices, particularly in the first half of the year, quite honestly, were at levels that we last saw around about 2018, 2019. They've recovered somewhat, but this has all been on the back of some of these geopolitical dynamics and significant in-country production building stocks in the key demand markets of China, India, and Southeast Asia. But look, if you look at the fundamentals, demand continues to be quite strong.
Okay.
Despite that, I mean, the IEA in their half-year report still says in 2024, demand increased by 1.5%, which is record levels. So from that point of view, we're quite encouraged by the core fundamentals.
Yeah. So at this point, it's really not about the long-term fundamentals, but really kind of short-term volatility that, you know, the coal industry can actually look past?
I think it's those short-term volatility plus the global uncertainty as a result of the tariff. If I can just give you one simple example. For instance, the tariffs on Chinese steel have resulted in excess steel in China. That steel has been dumped in India, beginning to affect some of the sponge iron producers, which is a significant part of the market segment that South African coals go into. And that has acted as a dampener on coal prices. All this is related to some of the short-term dynamics, but it's all not negative. It's not all negative because the new trend is energy security, access to abundant, affordable energy sources. That's why you're beginning to see India and China ramping up production within country to make sure that they've got access to this readily available resource called coal.
Well, talking about production, how actually has your production momentum unfolded in South Africa?
Our production momentum is unfolded more or less as we planned, other than the fact that in the first half of the year, our production was affected by excessive rain in the coal basin, affecting two of our open cast mines, Khwezela and Isibonelo. I'm pleased to say, however, since it has dried up quite a bit, those mines are already performing at levels that we expect from around about June, July. So turned around, and we expect the second half of the year to be pretty good.
Well, let's cross on over to Australia because production at interim was affected by geology headwinds. How deep has that impact been?
The geological features at Ensham is something that we knew about. Two big faults. What is unusual, you normally don't develop through two big faults all in one half of the year. But given where this mine was when we took it over, and in some respects, actually, we are our own worst enemies because we improved performance so much in 2024 that we ran out of reserve. So we had to develop through this. We plan to do that. The slower mining that you go through these tough geological conditions is something that we plan to do for safety reasons. The thing that was rather unusual somewhat is the fact that some of the quality of the core as we went through these geological faults did not meet our normal quality out of that mine. And that's why we reported this morning that we've stockpiled close to 300,000 tons of coal that didn't meet our normal quality coal, but we found a market for it, so we should work that out. We should work through that in the second half of the year.
July, I know that cost control is one of the priorities of Thungela. Now, I actually want to drill into the margins because, of course, you have this strong base of cost control, but at the same time, we talk about weather challenges and geological, headwinds. And I'm wondering then, in this kind of price cycle, how do your your margins shape up, amid all these other kind of operational headwinds as well?
Look, clearly, when you have got prices as low as we have got, there is going to be margin squeeze. And that's why you see the margins that we reported across the group. But we're not going to feel sorry for ourselves and worry too much about those prices. Our absolute obsession is to control what that which is within our control, which is you want to operate safely. And in that regard, we've gone 2.5 years without a fatality, which is quite pleasing. You want to drive productivity, and you can see what we're able to do in South Africa, where we're able to increase production despite the challenges with water and rain, 4% year on year, which is quite pleasing. You want to ensure that your cost control is really top notch. And if you look at our guidance, we made guidance in the first half of the year in South Africa, and we expect to come towards the lower end of the guidance in the second half of the year.
All right.
NCM is exactly the same issue. We're applying the same logic, the same principles, other than the challenges that we had with geology and the significant drop in production, which interestingly, if you adjusted for what we have stockpiled, actually our cost control is pretty good.
All right. And just lastly, as we wrap up the conversation, in terms of capital allocation, what are kind of the short-term allocation priorities that you have bedded down?
The first priority is we want to continue to invest through our projects, even in this cycle. And you'd notice that we announced that we've set aside some capital to complete the Zibulo North Shaft and to begin to do work on our gas project in Lepalale, because that's quite important in our capital allocation. And beyond that, we'll continue to allocate some money for our environmental liabilities. Again, we've done that. What is left is to make sure that we can return capital to our shareholders through the cycle. In this instance, we've returned 421 million to the holders of Thungela's equity, plus another 32 million to our employees and communities.
Right. Well, we do have to wrap up the conversation there, July. I must say it has been a pleasure having conversations with you during the results period. I do note that, of course, this is your last results cycle. So, from me and Business Day TV, we would like to wish you all the best in your future endeavors and your retirement.
Thank you so much. Bye-bye.
All right. That was July Ndlovu, outgoing CEO of Thungela Resources.